What's up, guys? Welcome back to another video. Got something very interesting today, which is you do have a short seller named Michael Burry. If you guys haven't heard who this guy is, he's pretty famous, especially he was one of the main characters in The Big Short. The Big Short is this financial movie where it showcases a real life story of several individuals and also a few institutionals and hedge fund guys. They essentially saw that the housing market was going to collapse because so many people are taking out mortgages. There was this really big real estate bubble. Housing prices just simply keep going up. And they betted that the housing market will go down, the bubble will burst. And Michael Burry was one of the most famous ones. He was managing Ski On Capital with a lot of money and essentially almost went all in this bet, which is pretty dangerous and essentially earned him a legendary status in the world of financials, especially during the 21st century. So the Big Short investor, Michael Burry, is saying right now that Tesla stock could plummet 90% and the slump could pretty much reduce a lot of the speculation on several companies. 90% is a lot. Right now, Tesla stock is worth more than all of the car companies in the world combined. But I feel like a lot of investors are essentially looking at Tesla as a company that just simply makes cars. I don't think you should do that. If you just look at Tesla, if they just make cars and no autopilot, let's say they make some pretty good EVs, maybe some charging stations, they don't really have a battery division group, they're not really getting any sort of a battery production or solar panels, then yeah, I mostly agree to that. But to the fact that 90% decrease is a little bit too much in my opinion. Some people do say that Tesla should be corrected a little bit. I mean, at the most, maybe 10%, take a little break and then slowly go back up again. Because Tesla's doing way more than just electric vehicles, I feel like a 90% plunge is way too much. It doesn't make sense. Michael Burry, by the way, has a massive short position on Tesla. He started shorting Tesla like a few months ago. And we all know what happened there. Tesla stock just simply keeps going up. They got added to the S&P 500. Vanguard Group started buying. Now Vanguard is like the third largest shareholder of Tesla. And I think Michael Burry is still holding on to Tesla shorts because he feel like Tesla could plummet. But guess what? Tesla stock just keeps going up. And the thing about shorting a stock, I don't really like them because your max gain is capped, but your max loss is unlimited. And that's pretty scary. Burry did do some pretty incredible trades, including GameStop, which he continuously bought like several years ago. But he's also been having a lot of criticism to other areas like Tesla and also Bitcoin, warning of dangerous bubbles in the market. I'm not really sure if I should believe this, but hey, he's saying that Tesla below $100 a share this year. That's what he's saying. And keep in mind that Tesla is part of the S&P 500, so I guess SPY will be hit pretty hard. But so far, I don't really believe this. I mean, Tesla below $100 a share is way too unrealistic. Tesla has increasing volume, increasing sales, a lot of really incredible products coming year. For example, you do have the autopilot. They will be having full autonomy by the end of 2021, which no other car company right now has. Essentially, if you want to drive fully autonomously on the street right this second, the only vehicle they could buy right now is a Tesla. All the other companies are still experimenting on autopilot, and almost no company right now like BMW, Mercedes, or Porsche have any sort of autopilot network that could transition from highways to cities and vice versa. They don't really have autopilot that detects roads or stop signs where people or pedestrians. And you also have Tesla working on a lot of solar energy stuff, including the power walls, solar panels, etc. They're also expanding to the Indian market, trying to create a battery farm in several locations, including Israel. I think that's one of the locations, and also Australia, which is a very big lover of the Tesla battery farms. They're also trying to make a gigafactory in Indonesia. That's also pretty big. Keep that in mind. And they're trying to make a bunch of these lithium-ion battery cells. And guess what? When Tesla has their battery factories fully operational, no other car company in the world could compete with that because third-party companies are simply too small. With all these different companies, including Jaguar, announcing that they will be having fully electric vehicles by the end of 2025, huge demand for lithium-ion batteries, and Tesla is already trying to secure the supply. So I don't really think Tesla will be falling below $100 a share. You can't really value Tesla as a car manufacturer anymore. Kind of got to value it as a tech company or a battery EV company. You do have some really good legendary investors like Cathie Wood and also Chamath who is saying that Tesla could easily be hitting $1 to $2 trillion because of its upcoming catalyst. So what Burry is saying here isn't really a good sign, and plus his recent investments aren't super good compared to other really talented funds out there. He's more of like a slow and steady type of investor. He just feels like Tesla is just way too crazy, too much frenzy, but there's also a really big story behind Tesla and why the stock just simply keeps going up. It's clean energy, and that's the future. I mean, you got the Biden 4 years. It's looking pretty good. And lastly, out of every 10 electric cars registered in the US, 8 of them were built by Tesla. The United States is becoming a really big market for electric vehicles, and there's a lot of new data from Automotive News shows that Tesla owns 79% of the total EV market in the US. Essentially, every 10 electric vehicles that were registered here in the US in 2020, 8 of them were by Tesla. And a lot of that is given to the fact that the Model 3 was a lot cheaper. It's like 40 grand, so it's really not that bad. There were some tax incentives for some individuals, and right now, you do have some companies coming out with electric vehicles, but you gotta wait a very long time to get them. So 2021 is still gonna be dominated heavily by Tesla, especially with the upcoming 7K tax credit if you buy an electric vehicle, essentially lowers the base model of a Model 3 to roughly $29,000 to $30,000. And that is a very cheap price. In fact, that's cheaper than a gasoline-powered starting price Mercedes-Benz or a BMW, which makes it look pretty good. So you do obviously have Tesla making up several of the spots. And you also have the Chevy Bolt EV taking up 3rd place. But currently, Tesla is dominating the US EV sector because they have autopilot coming in. When you buy a Tesla car, you get to stay with the ecosystem for a very long time. They give out monthly updates, unlike other car companies where if you buy an electric vehicle, that is about it and you go buy. Whereas Tesla, you buy an electric vehicle, you're going to be staying in the program forever. They'll give you some updated software, Christmas update. They got some Easter stuff going on. It's looking pretty good for the car company. A lot of people say they like Tesla and would buy a new Tesla because of the ecosystem. You will always stay very well connected with the company, and the Tesla brand is very hip and it's also very cool compared to a lot of other electric vehicle brands out there. If you buy a Porsche Taycan, that's about it. They're not going to give you any sort of an over-air update. Whereas if you buy a Tesla, you will be getting updates constantly and can even now do conference calls and also go into meetings on Zoom through the vehicle. That looks pretty good. And obviously Tesla will be advertising their robo-taxi network very soon, because the full autonomy project will be fully finished by the end of 2021. According to Musk, you got this robo-taxi network going on. And can you imagine making money from your Tesla vehicle? That seems pretty nice. So the company is becoming more techy than ever. It's heavily tech-centered. When they come out with a car, it's not just one vehicle. It's a lot of other stuff attached to it. You probably get like a solar roof if you have a house, then a power wall to store electricity, and also different subscription programs that are coming out for Tesla. It's looking very good for the company, and obviously I don't really agree with what Michael Burry is saying. I'm pretty sure he's still holding his short positions, and it's honestly very, very painful to be short in stock. I don't really think Tesla's a bubble. There's still several short positions on Tesla, but the amount of shorts have been decreasing. So many bears right now are thrown in the towel for Tesla. It's just a stock that you don't want to mess with. You don't want to bet it go down. That's about it. Thanks for watching.